gum.
Talk to you later.
You like the gum? I like that hard gum.
The Cuyahoga County Finance and Budgeting Committee meeting for Monday, August 6, 2018 will please come to order and the clerk will call the roll.
Calling the roll, Mr. Miller.
Here.
Mr. Jones. Mr. Jones is absent at the moment. Ms. Simon. Ms. Simon is absent at the moment. Mr. Tuma.
Here.
Mr. Gallagher. Mr. Gallagher is absent at the moment. Mr. Schron.
Here.
Ms. Brown. We have a quorum. Also like the record to reflect that Councilwoman Baker and Council President Brady also in attendance.
Great. Thank you very much, everybody, for coming. And item number 3 is public comment. Do we have anybody signed in?
Yes, Mr. Tarter.
Good afternoon, Chairman Miller.
Good afternoon.
President Brady and members of council. William Tarter from Broadview Heights, citizen of District 6. Good morning. I am testifying about a concern that I have. There was an article that I had read back in July that is in Cleveland Scene that discusses the allotment of syntax dollars for the stadiums. And as many of you know, I was heavily involved in this issue a few years ago, and I felt that since then I wanted to continue to be educated about the issue, and that's why I'm here today. So just a brief rundown for many people who may not be familiar. The syntax dollars were split evenly between the 3 facilities, about $86 million apiece, and that money was supposed to last for 20 years, those bonds. And taxpayers are responsible for any amount over $500,000 on capital maintenance. In the article in the Scene, they talked about the amount of money that has currently been approved on like Quicken Loans Arena. It's $23 million that has been spent, and $11 million has been approved by Gateway and going to be approved by council. And then they submitted a 5-year capital plan where they have an estimate of how much capital expenditures they expect to have. So they expect in the first 7 years to have spent about $71 million of that $86 million. And so that leaves about $15 million left by 2022 until the end of the lease, which in this case I think is 2034. And then the Indians, or sorry, not the Indians, Progressive Field has spent $37 million. They have $1 million that are going to be approved by council. And then they also submitted their 5-year capital plan, which is about $47 million over these next 5 years. So that will practically deplete the $86 million that had been budgeted for those capital maintenance needs. The Indians then submitted an additional $8 million at this latest Gateway meeting, which in my estimates would exceed the current threshold of capital maintenance dollars. So one of the things that I want to just encourage my elected officials to examine is what the funding mechanisms are for any obligations that the county might be on the hook for these capital maintenance issues over $500,000. And let's talk about it now, and instead of maybe waiting until the last minute when it becomes a more sizable issue. So I will be happy to send the report to the committee or the article where you get a chance to read it for yourself. But just as a person who's looking at kind of the long-term expectations and expenditures on these facilities, it's something that I wanted to bring to this committee's attention. Thank you.
Thank you very much, and I encourage my colleagues to give thought and pay attention. You're on target with that issue. Thank you.
Thank you very much.
Anybody else signed in for public comment?
No, no one else has signed in.
And Councilman Gallagher has joined the meeting. Thank you for being with us. And the next item, number 4, is approval of the minutes from the July 16th, 2018 meeting. The minutes are in your packet. Is there a motion?
Second.
It's been moved and seconded by Brown and Schron, and that's for approval of the minutes as presented. Any discussion? Hearing none, all those in favor say aye. Aye. Any opposed say no. Ayes have it, and the minutes are approved. Matters referred to committee are none, and discussion, we have 2 items, and the first item is the review of the county's second quarter financial report. And Ms. Keenan, you are up, and I would first like to take this opportunity to publicly thank Ms. Keenan and the administration for a very timely and thorough submission of the second quarter financial report, giving all of us a time to review it ahead of this meeting, which is the way it should be. So we're appreciative. Thank you.
You're welcome. Maggie Keenan, Office of Budget and Management. Oh, thank you. So I will be relatively brief. You guys have the update from us. If you have questions as I'm going along, please interrupt me. That's the easiest way to go about this. So starting first with the general operating fund, just a reminder, this is the general fund excluding the 0.25%, the additional sales tax. So this is the county's main operating account. We are projected to end the year with an operating surplus of about $1 million. That means that revenue is higher than expenditures, which is how we like it. Revenue is projected to total $382 million. That's about equal to what we had assumed in the budget. And expenditures are projected to total $381 million. That is $15 million under approved appropriation levels. And those budget levels do include some prior year carryover. Looking ahead, we are projecting a $14 million operating deficit in 2019. That means that our expenditures are projected to be greater than revenue. Revenue is projected to decrease about $2 million from 2018 levels, and expenditures are projected to increase $13 million over 2018. For the future year estimates, we are assuming a 2% increase on all salaries, bargaining and non-bargaining, a 6% increase in the cost to the county for employee health care, and then some other project-related expenses, including $4 million for the regional jail project and a $3 million draw on the reserve for the demolition program.
So, Ms. Keenan,
Yes.
can you tell us in a little more detail what's different about 2019 as opposed to 2018 that we expect about a $3 million decline in revenue and a $13.5 million increase in expenditure?
Mm-hmm. So on the increase side, it's mostly personnel. As I mentioned, we are assuming a 2% increase in salaries. That's about $4 million alone in the general fund. And then an 6% increase in employee health care, which in the general fund, that impact is about $6 million. So largely it's personnel. We do have some positions included in the estimates next year that were vacant for a large part of this year. Regional collaboration is one that comes to mind because that department had 2 vacancies for most of the year. And we are assuming some increases in non-personnel operating expenses, but for the most part, we're holding it flat. So it's driven by personnel. On the revenue side, the decrease that we're projecting is $1 million right now in investment earnings. That might change, but we're assuming $14 million this year. For next year at this time, I'm only assuming $13 million, and that's based on the estimate from our investment manager, and he gives me updates every quarter. And then we also have a slight decrease just in miscellaneous revenue, and some of that is the inability to keep drawing on cash reserves and special revenue funds. So this year we did have a lot of transfers from special revenue funds into the general fund. Not all of those are able to be repeated next year.
Okay, fine.
Okay. Looking at 2020, we are projecting an operating deficit totaling almost $30 million. Revenue is projected to increase in 2020 $1 million over 2019 levels. That's largely reimbursement that we get from the state or from the municipalities for elections costs. And expenditures are projected to increase $16 million over 2019 levels. And again, that is largely attributed to personnel costs, but also we are assuming a $4 million increase on debt service for the gateway bonds due to an anticipated decrease in admissions tax revenues. So the county has a bond issue on the original gateway project that is supported by admissions taxes and the general fund. We are assuming with LeBron James going to the Lakers that admissions tax is going to decrease, and the impact of that is going to be felt in 2020.
And as of January 1st, 2020, how much money will be in that state transitional fund that they provided us regarding the Medicaid sales tax?
$10 million.
And your projection on for 2020 in your slide, does that assume the use of any of that money, and if so, how much?
Not of the 10 million. So the county was initially allocated 25 million from the state. We programmed that over 3 years. It was, I think, 4 million in 18, 12.5 in 19, and then 8 million in 2020. On top of that, we received an additional $10 million. That 10 million is not included in our estimates.
I see. Okay. So it includes 8 million of stabilization money, but so actually on January 1st of 20,
There'll be 18 million.
we're actually going to
Yes.
have 18 million.
Yes.
Of which 8 million is old money and which was programmed into this estimate, and 10 million were those supplemental payments that they gave us, and those are not being programmed per this estimate at this time.
That's
Is that
correct.
Okay, fine. Thank you.
Sure.
Colleagues? Okay, please proceed.
So next, looking at the 0.25% fund. In 2018, we are projecting a $4.5 million operating deficit. That's the difference again between revenue and expenditures. The projections do reflect the $6.5 million transfer to the general fund. And we're assuming at the end of the year that there's going to be a $39 million cash balance in that fund, which is 68% of total expenditures. That ending cash balance does include a $7 million reserve for the county's hotel, but we're right now assuming that the reserve won't need to be drawn on until 2025 when we do the room redesign. In 2019, we're projecting an operating deficit of about $500,000. Again, we are assuming a $6.5 million transfer to the general fund and an ending cash balance of $39 million. 2020, we are projecting a $4 million operating deficit. This still includes a $6.5 million transfer, but there is an increase in debt service on the Medical Mart project, the Global Center project. So at the end of 2020, we are assuming a $34 million ending cash balance, which is 60% of total expenditures. And this cash balance is included in the overall general fund cash balance. Any questions about this? Okay. So now looking at the general fund combined, so this is both general operating and 0.25%. So some assumptions that went into our projections. I'm assuming a 1.5% increase in sales tax every year through 2020. After 2020, we're assuming that there'll be no change. We are assuming a change in property tax revenue to the general fund based on the retirement of general obligation bonds, but our current projections do not include the impact of the reappraisal. Based on the numbers that I was given, the general fund should see an increase of about $3 million based on the increase in property values. And that's not in these numbers right now. And that'll be $3 million every year, assuming that nobody disputes it and prevails. We are assuming a 2% increase on all salaries, 6% increase in hospitalization, no change in the cost of the Harvard Garage, Police Headquarters, or ERP projects, which as of right now are reserves on balance. So those projects have not yet been appropriated in full. And we are assuming a drawdown on all of our reserves, including the demolition reserve of $8 million, except for the hotel, which isn't due until 2025, the East Bank project, and carryover. In 2020, we are assuming, or based on these assumptions, we are projecting that our cash balance will be below the minimum required by county code. Questions?
Just a comment. My real estate estimate went up by over 20%, so I'm going to be helping to pay for that 3 million.
Thank you.
Well, if we're asking for comments, friends and neighbors have all been saying they're getting 20s, 25s, 30s, 40s, 50s, one even got a 60, and there will be disputes, I have no doubt. And that's, are you factoring in any costs that we have to put on additional? I mean, when we came on board, we had to put on additional staff to be able to take care of the load.
We're assuming we have them in the estimates, right? So we are assuming additional boards for the Board of
Okay.
Revision so that we can manage the workload. And this would have been based on the prior, what they say they needed to keep up with it. And that's why I said partly, I didn't get the numbers until after we had finalized these, but we'll probably wait until we see what happens with the dispute process. I mean, I know my own family is going to be challenging their property taxes, so I have no idea how that's
But
going
I
to happen.
we ought to be at least thinking in terms of whether we have to put additional boards on, additional costs.
We're already assuming that. So
Okay.
the cost of the additional boards are in the current projections. If they don't need as much as we have in here, then that would be a benefit to the county.
So what kind of increase of number of boards? 10%, 50%, 2%?
How many boards do we have?
We have-
I can get back to you. I'll get back to you.
That's
But
okay.
we are assuming an increase, and just so you know, the boards are supported by the Real Estate Assessment Fund. So it won't be general fund impact, but it would be an all funds impact.
Okay.
But I can get back to you on that.
Okay, thank you. Okay, proceed.
So the next slide I have is just a brief summary on the county's outstanding debt. At the start of this year, we had 1.6 billion in outstanding debt. There were no new issues in 2018. We did have one retirement of a general obligation bonds issued for the Rock and Roll Hall of Fame. I have the annual debt service totals in here, so I won't read them off for you. There are some increases and decreases in the coming years, though for the most part, we stay flat when you look at it in total. But as I mentioned, we are assuming in 2020 that the gateway debt service is going to increase because of the decline in admissions tax revenue. The 2014 sales tax bonds, the cost of those increase next year, and the medical mart bonds increase in 2020 by $4 million. These estimates for debt service assume that we have a handful of issues that are covered by TIF payments. So this assumes that the TIFs will continue to cover that obligation. And we assume that we're going to continue to get some repayment of economic development loans. So the county has issued debt and the Department of Development issued loans with those bond proceeds. So our projections do assume that we're going to continue to recover those loan payments. Questions? I'm going to bring you guys coffee next time. You're too quiet. Okay, Health and Human Services Levy Fund.
We're gonna go to Zig. We're gonna tag Zig.
What's that?
We're gonna tag Zig later.
I know, I told him I don't want to be booked with them again because you don't ask me any questions. So revenue. I am assuming $232 million in all 3 years for HHS levy revenue. That's the two voted levies that we have combined. Just as a reminder, these levies, unfortunately or fortunately, depending on how you look at it, are not affected by the reappraisal. So when we went out for these, we assumed that we'd collect a certain amount of money and the effective rate on the levies will change based on property values. So this protects the homeowners from increases in property tax due, but we don't get any more money. On the expenditure side, we are projecting that levy costs are going to total $239 million in 2018. This is just $1 million over budget. We are projecting expenditures to total $259 and $264 million in 2019 and 2020 respectively. These future estimates do assume an increase in salaries and healthcare, again, adjusted for how much of total operations the levies support. And they also assume that we are going to draw down $16 million in the combined public assistance funds in 2018, and additional $2 million in each year, 2019 and 2020. This does not assume any increase in costs to Department of Children and Family Services. So I know the county is going to be making some changes as a result of the task force recommendations. None of that is reflected in these numbers. The unadjusted cash balance in the levy and combined PA funds is projected to total $38 million in 2018, $9 million in 2019, and negative $25 million in 2020. The adjusted balance would be reduced by the $7 million reserve that we have for the Department of Health and Human Services. So needless to say, we need to focus on the levies in future budget planning because not only are we below the minimum cash balance required by code, it looks like we're going to be out of money completely in 2020.
So, on that point, if you look at the 2019 projection, there is an excess of expenditures over revenues by $27.5 million. Plus, we're using $2 million still in PA funds for 2019, so I'm going to add that on to it, and that comes up to a negative $29.5 million. And my question is that a pretty good estimate of where we are structurally on the H levy fund?
Yes.
So I would just bring to my colleagues' attention, if I recall the math correctly, 1 mil of property tax brings in about 27 million or so.
Mm-hmm.
So we would have to raise the HHH levy 1 mil just to cover the current structural deficit, and even then, not quite. So
Right now, if you increase the millage or add millage, it will be based on current values. So that'll bring in 28, 29 million, but yes.
And usually if we go out for an increase, we tell the public, well, we have these additional things that we want to take on, and but it's looking like a considerable increase just to fill the current gap. And so I just bring this to everybody's attention, and we got to do some very serious thinking about the HHS levy and see if there's some ways we can find efficiencies and reduce overlaps and see if we can get some benefit from ERP. But it's a very serious problem, along with the $30 million shortfall in 2020 in the general fund. So we just have two very big problems that are out there facing us over the next year or two, and my one piece of advice is we can't wait until there's 2 or 3 months before decisions or budgets are due. We gotta start now and start thinking about these things. Councilman Tron.
Well, and you raise a great point, is that, Mr. Chairman, that we need to be thinking about this, but we also know that as people are going to be fighting their reappraisal values, that's going to be fresh in their minds too. And we all know that that's going to be a challenge on both sides, what's the right number and what the fighting is going to do. And so if they're not successful, that's going to have a bad taste in their mouth too. So we need to be overly cautious about and conscious about how we spend every penny going through this county.
Agreed. Councilwoman Baker.
Thank you. And I guess I would ask, in the strategic planning of things that you can't put in right now is what you think revenue will be. For example, you put, I think you said 3 million for property tax increase, you're anticipating that. But there are other things out there that perhaps could be revenue generating that may or may not happen. Is, in your planning, do you ever perhaps on a chart put this may happen, and if it does, this much money could come in? Like the internet sales tax, for example. We can't count on that now, but it could come. It could certainly ease the pain of, so I just, and I'm sure there's other things out there that could happen, but we can't count on it until it gets closer to perhaps predicting. Where are you in that kind of strategic outlook, visual?
I have quite a big chart. So
Yes.
we track all of that. And as we get more data and we feel like a little bit more confident that these could come through, that's when they get worked into our numbers. So not everything in the projections is a done deal either, but when we reach a certain point, we'll put it in. The internet sales, we're watching that one closely. Assuming nothing had been taxed that was purchased online, the county would have generated about $7 million as a result of the Wayfair decision. But the state has been taxing already some of the larger retailers that have a physical presence in the state. So I am assuming now that the increase, should the legislature choose to act, would be more $3-4 million. That's not in the numbers right now because the state hasn't even done anything. But I mean, I have tons of worksheets that show, hey, if this legislation goes through, it could mean this. If this, we're tracking all of that. So there are things that are out there. There's a lot happening at the state level right now. For anyone that wants to contact your friends in Columbus, there are a number of, there's a lot of legislation that's been introduced, including by Councilman Greenspan, if we wanted to look to someone who's more close to home, that could have a positive impact on the county. But, you know, they're not moving right now in committee, so there's not much I can do until we see some traction that they're gonna keep moving forward. But we're monitoring everything that could have an impact on the county, absolutely.
I would only ask, Chair, that if it looks like it is progressing and we're getting closer to the next budget, that we can consider it at least, especially with a $30 million 2020 projected loss. If it's not going to be 30 million because we have another revenue stream, that's all. I'm sure I know you're including a lot that may not even come in, but are likely to.
Right.
And there might be another tier below that that is somewhat likely to come in. If there was some presence of that in your reporting, that would be helpful.
Sure. So I would recommend that you look in the second quarter report. At the end of the narrative, I have an update on all the legislative activity and cases that could impact the county. So I would just check that. I did try to note what the fiscal impact would be to us when it's possible to do some kind of analysis. And I do include as much as I can in the monthly updates too that I send to you guys. And, you know, as soon as it hits that likely to be coming, we do try to put it into the numbers. This OBM is not as conservative as everybody, you know, every other OBM. I mean, the last thing I want to see is that we're cutting jobs or services to people because we, you know, won't wait until the check gets cashed. That's not how we are. But, you know, we do have to balance that because I don't want us to start something new and then, oh, well, it didn't materialize. Particularly on the levy side where we don't have cash. On the general fund side, there is cash. Maybe we can afford to take some risk. That's all. A decision that would be made by the executive and council because we have the ability to cover ourselves if the revenue doesn't pan out. On the levy side, in the next couple of years, we're not going to have that option.
Thank you, Chair.
I would like to take Ms. Baker's line and formulate it into a question.
Okay.
And I would like for you to provide us a list of potential revenue items, things that are in the next tier below being likely enough to be actually in the projections. You know, it sounds like the 3 to 4 million from the Wayfair decision would probably fit in that category, and I'd like to know what else is out there, not things that somebody introduced a bill that's not in the majority and it has one chance out of 100 of passing. You know, something that there's a decent likelihood, but not enough that we're ready yet to put it in the projections. And I'd like to get a list of those things and just see what's out there that you're aware of.
Does the local government fund bill count as one of those ones that's not gonna go anywhere? That's what I'm banking on, that's $20 million. That was a joke.
Yeah, I think there's a possibility that we could get something, but not 20 million. Okay.
Okay, yeah, I
Okay.
can do that.
Okay, that'd be helpful.
Okay, then the last slide is just to look at our all funds spending projections for this year and next year. Revenue on an all funds basis is projected to total 1.5 billion. This is 5 million under budget. I've listed here some of the more significant variances from budget on an all funds basis, and there's detail in the report. And on an expenditure side, we are projecting that we're going to spend 1.5 billion. This is $132 million under the approved appropriation levels. I've itemized some of the larger variances. They're detailed in the report as well. I'm happy to talk about them now, but I don't want to take up time.
Okay. Any questions? Okay, well, I'm just going to close by emphasizing the fact that the fact that we have serious projected deficits in both the general fund and the HHS levy. I don't think these reflect anything bad that the administration is doing. It's structural problems. Yep. We have revenue sources that by nature don't grow very fast. Some of them don't grow at all. Some of them grow just a little bit, and we have things that cost more money every year, and there's a reluctance to stop dealing with the problems that we've been dealing with, and at the same time, every year another problem or two come up that we have to spend money on. So it's a challenging environment, and we're partners on this. We got to figure it out, and having good current and projection information is the first step in that process, so we're thankful for your assistance. Thank you very much, and I urge all of my colleagues to be thinking about these things, thinking about options both on the revenue side and the expenditure side, because we're going to have to make some pretty serious adjustments over the next couple years, and we all need to work on this. Thank you.
Okay.
Okay. Okay. And next item is the monthly review of the Enterprise Resource Planning System. We welcome Sig Bersens back to the podium. We know that he likes to start with good news, and I know that he's got some, and so we're ready for your presentation.
Chairman Miller, ladies and gentlemen of the Finance Committee and the Council, good afternoon. Yes, I do have good news. So let's kind of go right into that. The enterprise asset management component of the project, it continues to be running right on schedule. They turned the system on for fleet just a few weeks ago, and that's running quite well, and they're now in the process of extending the work order management system into facilities, which will be going on for the next 2 months as planned. And so that's, I think, excellent. The fiscal team has rebaselined or replanned the financial portion or component of the system. That was the major delay that they had to undertake because they couldn't start integrated system testing on 6/11 as they had planned. And so that has occurred, and that's good news. and they seem to have a pretty good handle on what needs to take place to get the financial components implemented in a reasonable and timely manner. And the HR component, which is to support open enrollment, which will start in October, started their integrated system testing as planned last week. And so we'll talk a little bit more about that, but that's quite excellent at this stage of the game. There has been some restructuring of the project team. The most experienced project manager who has been around and involved with the project the longest is now taking over and is running the HR component. So he is moving that forward, and I think that's a good step.
And who is that?
That would be Karan. He has been involved with this project for the last year and a half, I think. That's approximately, and that's quite a good step. The workforce management component, which was kind of buried with the payroll portion on the HR side, payroll has now basically been moved over to the fiscal side, and workforce management, which is the timekeeping piece, has also been moved under the umbrella of the project manager who is overseeing that piece, and that is a good move, so we can keep those linked and tied together. We are going to talk some more about workforce management. That's the timekeeping piece. It started late. That's a not good news statement. But Infor has virtually quadrupled the number of people that they have working on this as we speak, which is a good move. So I'd like to talk about some great news. So the great news is the fact that open enrollment integrated system testing for benefits has started, and it is running along quite well. So there's a daily dashboard now that's tracking which scenarios have passed, which ones have failed, and they're tracking this on a daily basis, which is excellent. That means that they're able to stay on top of this thing from the point of view of maintaining pace. Got to maintain pace if you've got 360 some scenarios that you need to get tested in 3 weeks, which is what's going on. And I think the other piece of the good news is that after the first 2 days of testing last week, they had 0 defects, which is very good. So I tried to chart these things a little bit for you to show you what a normal pace might be. It's somewhere in the vicinity of 35 to 45 scenarios that need to be done every day. That's the straight line. Things have changed a little bit. I thought they were only going to be doing testing 3 days a week, but they're literally going to be doing it for 5 days a week. So that's going to change these numbers slightly. But you can see in the very beginning, they're running at a pace that's well above what they need to do on a daily basis, which is excellent news, with 0 defects. So I'd like to talk a little bit about the fact that the team dodged a bullet. 2 weeks ago, we talked about the whole issue of some time capture questions, who was going to be using the system for capturing time, who wasn't. But along the way, as they were going through this particular issue, they got a surprise. The team got a surprise. And that surprise was that, we haven't configured the system to take care of auto pay. Some people refer to that as exception pay, where you basically say, oh, gee, I get paid for 40 hours a week. All I have to do is report my vacation and my sick. That wasn't configured in the system, and that was a surprise. And so the whole idea, I think, and the reason I'm talking about it as being dodging a bullet, is that we haven't gone forward too far, and we haven't started testing to find that out. And the team is actively, right now, as we speak, resolving what needs to be done to make sure that that particular aspect will be configured in the system. And I think the good news is that let's not worry about who's responsible and pointing fingers. Let's just go to what's the solution. And the solution is that Infor has stated, and I gave you a quote here on this page, that they recognize it needs to be there. They will make sure that it gets in there. So that's what's going on. And that's a good thing that they were able to at least not find themselves getting very, very surprised about a month from now when they started doing their integrated system testing. So there's always not such good news. We're still planning, we're still making changes to the plan, you know, and it'd be nice if we could just call it, finish, and say, we know what our plan is. But part of the reason is the fact that workforce management is that timekeeping component. That started late. And they've been struggling as a team to get that resolved and try to figure out how they can keep the schedule, because the timekeeping has to be in place in order for the team to turn on payroll. So that has to happen. Yes, they're moving forward with payroll. Yes, they're going to start integrated system testing next month as they were planning. That's going to be okay. But the workforce management, they're still designing, they're still configuring, and they're struggling. And like I said, Infor has stepped up and they've added more resources, but there's also talk about cutting a few corners. And the one place where you don't want to cut any corners is going to be testing. And that's where there's a constant conversation right now between the team and with Infor with regard to that. And that puts them in a place where they are still doing some planning, still doing some estimating to try to tie that down. And the other thing I think that they recognize, which is important, is they recognize that there needs to be a plan B. And so they're trying to figure out what plan B is. And they're going to have to make a decision about that in about a month as to whether or not they're going to go to plan B. And plan B will defer payroll. If you can't get workforce management done in time, then you're going to end up pushing payroll into 2019.
Sig, could you give us a little more explanation about what you've referred to in the last couple reports as a complication where they're gonna start the payroll, they're scheduled for 12/24, but there's some kind of problem involving the general ledger and which isn't expected till the end of the first quarter. Could you kind of explain that problem in layman's terms so we get a little better understanding of what the problem is?
When you process payroll, you calculate what the charges are going to be for payroll, whatever they may be. And you need to be able to then pass that information to your accounting system, which is often referred to as labor distribution. So the charges that the summary charges of 8,800 people and the values associated with their checks needs to get to the accounting system, okay? When you change your accounting structure, which has been done in the new system, that the accounting structure is different from your current system. So now when you sit there and say, I'm processed payroll, I need to pass my accounting information on to the accounting system, which account numbers am I going to use? Okay? It makes sense to use the account numbers that are in the new system. Mm-hmm. Okay? That makes all the sense in the world, rather than trying to figure out, how do I change all these various amounts into different accounts to put them into the old system? So that was the complication, because everybody had, as part of the replan, they were all going to do all the fiscal stuff at the end of first quarter. Well, now everybody said, that's right, we still need to have those account numbers. So we've got to have the general ledger available in the first week of January to receive that labor distribution from the new payroll system. Does that make sense?
Yeah, so has the timetable for the general ledger been moved up to the first week in January?
Yes, it has.
Mm-hmm. Okay,
Exactly. That's exactly what has happened.
okay. Councilman Tron.
And that was a few weeks ago or months ago, you spoke about the general ledger potentially was going to come over in partial. They've now decided the entire general ledger is coming over?
In essence, yes.
Okay, all right. And then back to the timekeeping, I think you also indicated that all the equipment, physical equipment, has been ordered,
Yes,
and it's all here.
I don't know for sure if it's all here, but it's supposed to be, and they recognize that they need to get it here, get it, get it installed and do some tests on the actual equipment.
Okay, we have the dates for the install, we have the dates for the testing of it to make sure it's communicating, and I don't know whether people are gonna log in directly on, some people will be able to enter directly on their computer as opposed to a physical piece of equipment, and all those have been tested?
Yes. Well, that's part of the process of what they're gonna be testing in September.
Okay, all right,
Yeah.
good. And,
Okay. And they have sample devices, they have sample clocks right now that they're gonna be able to use for the testing.
so that everybody who is probably right now using a time clock device will still be using a time clock?
Yes, sir.
And everybody who is allowed to enter their work start date, time on their computer will probably be the same? Is that
Yes.
what, okay,
I mean, every attempt is being made to keep all of that the same. Okay, which includes some who are still using Chronos that would probably continue to use Chronos, which are the old time clocks.
okay. And then the communication back to the software is going to be or has been tested that they're talking to the
That's
new
what they're
software?
going to be testing over the next couple of months.
All right, thank you.
We're still talking about a little bit of bad news, and that's the fact that we still don't have all of the benefits estimated, okay? So that has not changed for now 2 reporting periods, on my perspective. So HR still hasn't finished theirs, finance hasn't formally finished theirs either. I mean, I've seen drafts, I'm aware that they've got some things, but they haven't really stepped up and said, here they are. We need to remind ourselves, even though it's great news that the testing is going on right now and that they're on a good pace, there are a few RICE items that still need to be developed, and the team decided to move forward with the testing, but we've still got a couple of items hanging out there, and everybody should just be aware that they are there, they're working on them, and they intend to include those in the testing in a very short period of time. And so I'm just kind of giving you a reminder of what the word RICE means, because that's an acronym that the team uses. All about, R means reports, I is interfaces, and C is conversions, and E is an enhancements, okay?
So you're saying that to some small degree, they're building the plane and flying it at the same time?
To a very small degree,
Yeah, okay.
okay? I showed you this concept model back in June. And it was just a whole idea of saying, well, here's a model for how you might be looking at and comparing the benefits to the cost of the project. And basically look at it from a point of view of, well, when does it pay for itself? Okay, so this is conceptual. I mean, I've tried to use the estimated cost that currently is in play, and some estimates for what the ongoing operating costs would be, and then just basically, said, okay, when would those benefits start being recognized? And of course, you just end up with this graph where the lines cross, it pays for itself. This needs to be updated, okay? And the cost changes that we're gonna talk about in terms of their replanning aren't going to have a very noticeable impact on that cost line, okay? It'll be there, but it's just because you're talking about such large numbers here. But the benefit line should increase a little faster and a little higher, and which means that you might actually pay for this thing maybe slightly earlier than what it's showing. Okay? So we talked last time about the effects of the rebase lining, and I put a little trampoline in here because in essence, it kind of lets you jump the bar of getting done. And so I started off with, here's the June report from the team. It says where are they, what are they gonna do, and when are the go live dates? And then a month later, here are the July ones, okay, and that's when they first started showing you the change of, let's push everything for fiscal out to the end of the third quarter. And of course, now they've got to pull general ledger back. So now I've looked at a draft of their report, which you should see shortly. And the team has presented the 3 major components and have shown you that where things have changed and where they're going to roll out. The first piece is enterprise asset management, which is public works, which is the work orders. That's fundamentally unchanged. So it still continues to be on target. Basically it's showing that it will launch at the end of September for facilities, and that will finish off that component with the exception of having to connect it to the financial system, which comes later. Okay? Then the rollout schedule for HR, that continues to be about the same now, which is good news. All right? So open enrollment still is on track. The team is very comfortable and very positive that open enrollment will use the new system in October. And that's the major milestone. So that's somewhat unchanged. Now, if you look at the next one, we look at this whole idea of, what's happening with fiscal. So the team is showing a blue line in there, which is workforce management. That's the one that was with the HR team and was tracked over there, now is being combined with the fiscal group and the payroll group, so they know on what's happening. So in essence, what I've said here, so for the payroll rollout, those two have to occur, and they have to occur in tandem, and that's where the risk is. That's where the risk is. But right now, their plan says workforce manager will start 12/21, payroll will start capturing time on 12/24. First week in January, you'll issue paychecks. And the risk is that workforce management will not be ready in time. And then the remainder, and that included general ledger. General ledger has to be ready on first week in January. Then the rest of fiscal is shown on this next page, where accounts payable, accounts receivable, not contracts, but project costs, grants, all those pieces of fiscal, those are all gonna go in at the end of the first quarter of 2019.
Yes, okay.
And on your payroll in January, W-2s are going to be produced through which system?
It has to be from Famous.
Okay, that's why I
has
was
to
hoping they weren't going to move that. I mean, you could move that over because they're going to want historical background on both systems at some point.
Ultimately, you move history, of course,
Right. But W-2s are all going to be done in the old system? Okay,
for the prior year, for 2018.
all right.
I want to talk a little bit, we started talking about critical path elements the last time I was here, so I just wanted to kind of remind ourselves, contractually, the team is following the Infor methodology of how to go about doing this. So that's what you see here. This is the methodology, and the message here is simply to say the methodology applies to all of those rollouts. Remember, there were 20 at one time? We have not quite as many now, but there still applies to all the rollouts. And it's just a matter of just reminding ourselves that there is this sequence of events that needs to take place each time you're looking at whether it's HR, whether it's fiscal, whatever the case may be. The other thing I wanted to show you is that within each one of these larger components, so if you look at the example, that light green one is design. Well, there are sequential activities that need to take place in order to complete design. All right, and I summarize them. I've summarized them just to give you some feel for what they really, what's there. So you have to do what's going on today, that's as is. What do you want to do tomorrow? That's to be. And then you got to do a fit gap. You've got to do an analysis that says, what's the difference? Because that tells you what you have to do. Okay? And that tells you what has to be in the system as you go forward. So just kind of giving you an idea of how I kind of broke that out. And down here where you see the blue one in the center, that's called testing. And if you look down below it, you'll see, oh, well, we need to prepare for testing, and that's all those punch lists we've been talking about, getting the data ready and all that kind of thing. That's what the test preparation is. Got to do that before you can start testing. Then you do the integrated system testing, and then follow that with the user acceptance testing. And then you sit there and say, oh, well, now that I've tested everything, I've got to be prepared for turning the system on, production preparation. And those have to occur reasonably occur in a sequence, the critical path. Okay? And you'll see at the very last end where Infor refers to activate. The two orange ones down below tell you, well, what's really there? Oh, it's train and cut over the system. You can't cut over the system until you've trained the people. Make sense? So what I've done is I've tried to, then highlight for you, what are the most critical places in a project as you go forward? And as you look at these monthly reports and as you have conversations with the team, is to understand by rollout, where are they with regard to the critical items in here? And we've talked about those, and now it says, before you start IST, before you start integrated system testing, have you done the punch list items? Are they ready? And, oh, by the way, have we asked RSM if their assessment says you're ready? By the way, their report this time around talks about that. So this is just to kind of set the stage for you as you have conversations and as you read that monthly report. So what is the overall condition of the project? Here are all the rollouts. Just letting you know they're still there. There's still all these pieces. Okay, so it is a complex solution. There are a lot of pieces. And some of them are going to be rolled out soon. Some will be rolled out later. And here, but at least the anticipated go live date is there. And then what I've tried to do is I've tried to kind of group these together, because clearly if their go live date is the same date, you're going to be doing that work together. Okay? And then I thought it would make some sense, and this is intended to just give you some directional approaches, is to look at these critical path elements and say to yourself, well, where is that particular component? Where are they today? And they're in different places. They're not in the same place. So if you look at Public Works, they're training for facilities rollout. That's what's going on. If you look at open enrollment, we've already talked about this. They're testing. So that's a circled item there, big green arrows pointing at the testing area. That's what's going on with them. Talent acquisition is part of the talent management component. That's also being tested because that's going to roll out at the same time as the rest of HR and benefits. So hiring people needs to have the system in place to do that. That's what that's all about. Time capture, this is the one that I consider to be the risky situation. You'll notice that where it's at, well, it's that light green area. They're still designing, they're still configuring. Okay? Payroll is getting ready to test. That's what's going on with payroll. And the general ledger, got to get general ledger going, so they got to start testing that they weren't going to test, or now they got to move it forward. And the rest of fiscal, they're still doing some development for the rest of fiscal. Those RICE items we were talking about, that's still happening. Employee performance, that's the other half of talent management. So they're doing some fit gap. They're trying to decide what to do with it, but it's deferred. It's not going to be done until 2019. And then contracts and expense reimbursement, they're just planning that one. That's going to be in August of 2019. Okay, so here's this complicating thing, Mr. Miller, that you talked about. I'm just sort of repeating some of this, and the fact that when we did the rebase lining, we had these complications coming up. And one of the things was the question about which general ledger is the system of record, and when will it become the system of record? Okay, and so we needed to get that resolved, so we knew what data is going to be going into the general ledger. And you can see that there are some questions, some options, if you will. You can say all the Infor payroll data is going to go into the old system, the old general ledger, which is referred to as famous, because it currently is capturing invoices, purchases, requisitions, budgets. I mean, that's all going into the old system, and would still continue to do that, because you're not getting a new system to replace all that until the end of the first quarter. So, but the other approach is, well, we can do payroll, we can go to the Infor general ledger, but then we can take all the data from the Infor general ledger and put it into the old system. In those two scenarios, your old system is your system of record, the one the auditors look at. And the last one is, well, maybe we can just pull the data from the old system and bring it into the new general ledger. And since a significant portion of your budget and your spend is on personnel, that kind of makes some sense in my mind, is to go ahead and bring the rest of that into the general ledger, into the Infor general ledger, using the new account numbers. And so that's what last time we talked, I consider to be the most likely. Well, since then, the internal audit department has been queried, and they've been asked, okay, what's the system of record? What should be the system of record? And they basically say it makes sense for the new system of record, starting in January, to be the new general ledger. But they do still have an open item, and that is that if the formal request has been made to the state auditor. And to my knowledge, they do not have a response from the state auditor yet. And then we had this question the last time we got together, well, who's using the system, who isn't? And that was what you were talking about earlier about, okay, well, who's going to use the time clocks? Who's going to sit there and use their, the keyboard to key in some time? So I try to give you an update here. So the first three columns are what is typically referred to as the executive agencies. Those are all part of the new system. They're all going to be using the new system. Okay? The next two columns is where we had the question. So we've got elected officials and boards and commissions, and those are typically referred to by most folks here now as the non-executive agencies. But we have exceptions. So what I've done is I've just simply highlighted for you in yellow the exceptions. Those groups are part and parcel with the executive agencies. So they will use the new system. They will enter their time in whatever form or fashion makes sense for them to enter their time in the new system. Okay? The rest will continue doing what they're doing today. Now that's a mixture. That's a mixture. In some cases they are providing paper. In some cases they're providing spreadsheets. In some cases they are entering things into Kronos, and there's going to be an interface file that's going to feed the data from Kronos over to the new system. So there's a mixture going on there. Okay? So what I have here is I pulled this information from the draft report that the team is going to be delivering to you shortly, which is specifically clarifying who's going to be using the system and who isn't for payroll and benefits. And that's a quote right out of their document. And that basically, I think, is saying what I just got through telling you. So let's talk a little bit about their report. I did get a copy of the draft report. So I'm showing you, here is their content outline of what's included. Some reactions to the report. Given the rebase lining, I certainly would encourage you to review the report, particularly the appendices, because it will give you some solid support for the positions that they are presenting. Okay? I think it's important to recognize that the team has included the impact of their latest replan. So because that was a question. So, you're talking about extending this project. Is it going to cost more? How much? They've addressed that. Okay? Benefits, though, all they're doing is repeating the benefits that's been the same for the last 2 months. Last two of their reports. And then they do provide progress and status information. And I think the important thing to note is that it's actually current as of last week, rather than, being a little older.
Okay, Councilman Strawn.
If they're going to be listing benefits and they're going to make a change and they're going to increase the cost to the county, shouldn't there be benefits specific to those decisions? Not the decision to do the ERP benefits, but the decision to defer going live on the particular date. and a decision to spend more money. They should, you might not like the benefits, but there has to be a benefit associated that they should be able to enumerate.
Sure.
It shouldn't be a repeat of a benefit that said we're going to reduce paperwork or any of that stuff. That should have been the decision to go with this project in the first place, which should have been a while ago. But if they're going to say, I want to go 3 months later, it's because there's a benefit of us getting higher trained workforce, or there's a benefit of getting better input from Infor to whatever the benefits are for that 2 or 3 month delay. There should be something they could enumerate. It is that we're not ready, and so we're going to get the benefit of having a better trained workforce the day we go live.
Yeah, there's no question that there has been some directional comments from the leadership that what's most important is that they get it right. I mean, there's no question that that's been the position. That's been a repeated statement. So sure, I mean, if you take the time to get it right, then you can in essence estimate what your opportunity cost is for what would have happened if you got it wrong. Clearly, yeah. The other thing that probably needs to occur, I mean, as an aside, is that, you know, we just got through talking about there's a long list of non-executive agencies, and that includes the many of the elected officials and their organizations, as well as many of the boards and commissions. Well, who's to say that a year from now or 2 years from now that they are brought in the fold? And if they are, one would think that there would be increased benefits for them. Well, why else would you do it? An aside. I'm repeated here on page 49. I'm just repeating for you what's in their report with regard to their status representations. I think it's important to recognize that they do see that there are some concerns and issues, and they are telling you. I think that's a good thing. And they do see that workforce management is actually, they refer to it as being in a red condition. I mean, it is a risk. I mean, it's a potential problem that should be looked at and monitored, and you know, every month for the next 2 months, you know, you ought to be asking about that, because that's serious. That's serious, and it's a huge risk. They also present, and this is what I said earlier, is they have estimated what the impact of these changes are to the overall project budget. So they've done that. And I think, and they've also then made the statement, literally have made the statement that, and that's, you know, and this, here are some just rephrases from their statement. They're relatively comfortable that they'll stay within the $25 million authorization. And I think it's good news. That's good news. There's no question they're still negotiating with Infor, but the numbers they're all going to probably be exactly where, you know, where I last time I was here, I talked to you about what kind of numbers would probably be involved. And I think the numbers are ending up being around there, around 2.5 million or whatever the case may be. They're pretty close, and they're negotiating.
You said that core HR has been moved to yellow. What was it previously?
Well, it was green a little while ago, and then it was a matter, then the issue became which direction does the arrow go? So when you look at their report, you know, they changed the direction of the arrow, okay? And I think part of that's because remember there's a couple of rice items that are still not developed. Sure. So it's kind of, you know, a little down arrow. They're recognizing that.
Uh-huh, okay.
Okay? But the arrow is, you know, all that stuff about workforce management, that continues to be very clearly red condition.
But based on what occurred in the last week or so, we're basically pretty optimistic about HR.
Very much so.
Mm-hmm. Okay.
Very much so.
Okay, that's what I thought.
On project spending, I tried to use their estimates as well as my estimates to try to give you a picture for what the spending would look like over the next 18 months or so. And so what I've shown you here is the original plan for the spending, what it looked like, and then the net increase and what it might look like. And you can see that the spending is, kind of tends to be about in the same pattern on a monthly basis. It's just that the entire line has moved up a little bit. Okay? So that's just to give you a picture of what the spending would look like. You know, there's this big fall off in December, no surprise there, it's kind of the holidays. And there's a big peak right, you know, in December, which is the one-time annual license charge for the software, which is about $1.5 million. And so that kind of shoots that up. And of course, somewhere down the line, 2019, you're going to have a similar cost. And I presume those are all part of the 2019 budget requests that IT is making. That's where it belongs. Okay?
And what's the target date for start of fiscal IST testing?
January, I believe.
For IST?
For the rest of fiscal, January or February, I forget exactly
Okay.
when.
All right,
Yeah, but I think it's January.
okay.
So the monthly spend, you know, I didn't get a chance to get the latest actuals in here. I have them. But this is not updated. It just shows you what I showed you 2 weeks ago. So it needs to have, you know, an additional month of actual spend in there. But when I looked at the numbers, there were no surprises. Okay. In terms of my conclusions, so the targets that basically have come out of the rebase lining, work orders for public works will complete as planned into September. Open enrollment will begin in October. Time capture must be available 12/21. I'm not saying it will be, can't say that, but that's the given. General ledger must be ready the first week of January to receive the first distribution from payroll. Payroll continues to be the target for first cycle of pay happening in 2019. The big piece that you're probably going to need to be looking for in that is not, yes, the start of integrated system testing, but the big piece is going to be when and how often are you going to run a payroll? A parallel payroll, excuse me, I forgot that word. That's an important word, which will probably take place the month before. And that needs to be looked at carefully, because that's the exposure. The rest of fiscal will roll out the end of first quarter. And I would say to you that from a conclusion perspective, everything that we've just listed on this page, everything but time capture, which is workforce management, appear to be very achievable. But I'm real nervous about workforce management. So there's a new tipping point.
So,
I'm sorry.
so in terms of the workforce management, what are the critical dates coming up ahead that we can monitor as to whether that's on track or not?
I'll show you that in just a second.
Okay.
Okay?
Right.
Let me talk about the new tipping point. So we need to recognize, and we've said that workforce management started very late. Infor has quadrupled its consulting staff to accelerate the completion of design and configuration. The team is targeting September for testing. And we need to remind ourselves the major thing that's going to be going on there is you've got 33 collective bargaining units, 33 sets of work rules. Those are in workforce management. That's what's going to be tested. And boy, that's not going to be easy. So if the completion of the integrated system testing punch list, getting ready, if you will, for testing workforce management, if that stretches into September, the go-no decision will occur probably in late October. The team's going to say, we can't get ready, we can't finish. So that's the tipping point. That's the point in time when it's gonna probably happen. Now, to answer your question, Mr. Miller, this is a chart from their report. And remember I said, take a look at the appendices. This is in the appendix. It's a very nice layout of what has to happen for payroll to go live. So it shows you the time frame. It shows you the time frame. It shows you for workforce management, general ledger, and payroll, all three pieces, when the integrated system testing has to take place, when the user acceptance testing has to take place. Okay? I mean, they really did a nice job, I think, to lay that out. And it answers your question, and it's very clear. And you can see, you know, because you're talking about test cycle 1, test cycle 2. It's how many times they're going to go through it. They recognize they got to go through it multiple times, and that's okay. It has to happen.
So it looks like September 20 is their target
Yep.
date for the first round.
Yep.
Okay.
So and they have to get prepared prior to that. So all the punch list items, and again, payroll is in fairly decent shape. General ledger is in fairly decent shape because they were trying to do all that back in June. So you got a lot of that. Okay. All that business of coming up with test cycles and test scenarios, those were all done for general ledger back in June. So it's going to be okay. It's going to be very, very doable. The one that's going to be the problem is workforce management. Can they get ready in time? And if somebody comes up with, oh, well, first of all, remember, we're already having this issue of this trying to solve the exception pay question, which everybody was surprised at. They're doing that right now, this week. They're saying, how do I get this configured, and I gotta get it done, and I gotta get all the rules. They're going through that right now, okay? So that's, you know, certainly an impact, right? And then you gotta sit there and make sure that you've got all those work rules ready. So it's not inconsequential. Does this answer your question? Mm-hmm. Okay. So with regard to spend, you know, I agree with the team. I mean, they've come up with some very reasonable, solid detail estimates. And it does show that they'll stay within the 25 million. I do have a caveat in here, and that is, as long as we can clarify once and for all what's a capital expense and what's an operating expense. If you look at their funding chart, you know, they still have a lot of funding for IT personnel, and it runs all the way through 2019. Okay, and they also have a contingency number in there. You know, so there are some pieces in there that probably still need to have some work. So but there's another tipping point. I got to kind of bring this to everybody's attention, and I've talked about this, I think, the last time I was here. If you're not careful, because as you defer and delay a project and spread things out, you start giving everybody more time. And when you start giving people more time, they have a tendency to start asking for more things. So you've got to be very careful that you don't start having scope creep happen. Oh, I'd like to have this report. I'd like to have, you know, you start having that sort of thing happening. And if you're not careful, all of that will come to a head probably in January. And so that will become another kind of major tipping point that says, well, if we do all that, if you have one of these organizations that says, well, listen, I don't want to wait 2 years to start using this new system, and I'd kind of like to be included. You know, so that's an example of scope increase. And if that happens, you know, you may find yourself with the team coming to you and saying, well, we need another $1 million. And that extra $1 million is probably going to take you over 25. So
So
that's my story.
I appreciate that story, and if we go back to fiscal and we exclude the very last item, which is the employee performance. Other than that, when is all the rest of it supposed to be completed?
The accounting components right after the end of the first quarter. And then you've got contracts and expense management.
Contracts and expense, okay.
Contracts, and they call it contracts and strategic sourcing. But, you've got that Infor module, and then you've got, expense management, which is basically expense reimbursement. It's helping everybody track their expenses and turn in expense reports and things like that.
And is contracts and expense management, is that a relatively small component compared to the whole of the project?
Yes.
So after we get past the fourth quarter, or after the first quarter of 2019, we should be in operations as opposed to installation for most of the project. Is that a fair statement?
Well, and rightfully, they will say that we need to have some post-go-live support, whether that's 1 month or 2 months, you can have conversations about that. But that's, rightfully, there would be a need for the project team to allocate time right after you turn that button. Right after you push that button and you start, then you need to have some hand-holding. So I call it hand-holding.
Certainly by the end of the second quarter.
Yes. Yes.
So most of the second half of 2019's expenditure should be in operations as opposed to capital. Is that correct?
In my opinion, yes.
Okay. Questions, Councilman Tron?
On your slide on payroll outlook, which was your, I think, third to last slide, we had the 11/20 date on the three factors as far as the workforce management, payroll, and GL on that. That's to start on the 20th? Is that what is that when they're going to start those three functions?
Well, my understanding is they're going to literally start the testing, I think, early in September. But I'm not sure of the exact meaning of that 9/20 on there.
No, I'm talking about the 11/20.
Same statement.
Okay, so we don't know whether that's completion or start?
I don't know.
Oh, that'd be a big difference, wouldn't it?
Yes, it would.
I'm sorry, but
If it were me, I would presume that that's the ending. It would only make sense.
We're supposed to get the actual report in a couple of days.
Yes, you are.
And when we get the actual report, if it's showing the same as this, we can ask them a follow-up question to clarify that
Sure.
point, and probably should.
okay. Well, the reason why it just jumps off is that 11/20 is a Tuesday of Thanksgiving week. It just doesn't make sense that you would pick a Tuesday in a holiday week when you know that your workforce is probably not going to be here. None of them are going to be here on Thursday. In a high degree, they aren't going to be here on, a big chunk aren't going to be here on Friday.
Which is why it probably means finish.
Well, I'd like to hope so, but it's also not a date. I've always picked finish dates as Fridays or Mondays on.
Yeah, and I apologize, I did not get this clarified, but I didn't have a lot of time with it.
It just struck me as an unusual date, a Tuesday of a holiday week, when you know that a lot of people aren't going to be working those days.
Well, I think it was helpful that you got to see the monthly report at all and incorporate some of that into your comments. I think that was very useful. So we kind of know some of the things to look for in greater detail when we see the final version of that monthly report in a couple days. Okay. Anything else? Okay, well, just a general comment. that I think the general trajectory is favorable. I mean, a couple months ago, we had multiple concerns on multiple fronts. It appears that the management's better. It appears that they have a better detailed understanding of what the critical paths are and what has to get done when in order for this to take place. We've had some milestones that have been passed and successfully. So we still have concerns, a few in HR and a lot more in time management and fiscal, but we've got a shot.
I would agree.
Yeah. So anything else? Yes.
On that same topic, we've got a shot. Where do you think we are, in your opinion, in August 6th of 2018? Would you say if you were to gauge the success of this plan as outlined today, going even into 2019 for fiscal, are we, if it's 1 to 10, are we an 8? Are we a 7? Are we still maybe worried and at a 5? Where do you think we are so that there aren't any surprises thinking that, hey, we're going along really well? We expect it to be meeting its end goal.
The team, as you probably know, basically divides the project into thirds. Okay, I mean, there are 3 chiefs. There are 3 major work streams, and those are Public Works, HR, Fiscal. If you focus entirely on, and so I think what I would probably do is I would think of it as 4 components, 4 work streams rather than 3, because I think this whole payroll piece is very definitely needs to be honed in on, looked at as a single piece. But that means that it literally is crossing the ownership of 2 different chiefs. Okay, but be that as it may, I think that the team looks at it that way. It looks at least in those thirds. I would say you need to look at it in fourths, and then you could look at each one in terms of a score of 1 to 10. Clearly, Public Works, is pick a number, 8 or 9 out of 10. I mean, they're in great shape. HR, open enrollment, moving along fine. Really doing well. Probably a 7, because you got a couple of rice items that are hanging out there that could surprise you, but okay, call it a 7. Fiscal, there's just plenty of time for fiscal. I mean, there's plenty of time for fiscal. So you probably can say, okay, now that you've got all this time, 7 or 8 for fiscal. I have a real problem thinking anything better than a 5 or a 4 for payroll. I just think that workforce management is creating a significant risk for the project team. And it needs, and you just don't have a lot of time left to make that correction. I mean, we got to be careful we don't cut too many corners. If they say, we can squeeze this in if we reduce our testing to just 1 pass. Katie bar the door. I mean, it won't work. It just won't.
Well, go ahead.
Didn't we recently, wasn't there an assigned 1 project manager to go over the 3 or 4 different pieces that will make sure that fiscal and HR and Public Works and payroll, they all talk to each other, and that if there's a problem with either one of those departments, there's one person that will make the decision to say, this is what we do to make it better. Didn't we get past that or no?
Well, the last meeting, I think this group asked that specific question of Mike Young, and he answered that he was the decision maker.
Right. Is that an improvement, given what you just said about the 3 or 4 different categories of everyone has their own number, but we need a 10 for all by the time we finish?
The team needs to continue going down the path of looking at looking at this overall implementation from a functional process perspective rather than from independent
Right.
stovepipes of the chiefs.
Right.
And, they still do that. I mean, if you look at, look at their report, they still talk about, well, and in fact, the way they showed the bars, I mean, here we're focusing on general ledger, payroll, and workforce management, and should be looked at as one single functional activity.
Right.
Yet the bars have a different color for workforce management.
Okay.
It's kind of like, oh, well, that's because that's a different chief.
Yeah.
Does that make sense? I mean, so they need to get over that.
Okay.
In my opinion, they need
Right.
to get over that. Need to basically say, okay, look, we've got an executive steering committee. The chiefs have their input. Of course they should. I don't argue that at all.
Right.
But they're moving down the right path. I mean, the fact that they've pulled those three things together and literally look at them that way.
Okay.
And then the next thing that should happen, of course, is that, you got this chart that shows what they're doing for payroll, and it shows those three being connected and work together, as they should. I mean,
Right.
that's a good move. But now what about those other pieces?
Yeah.
Because here's an example of something that I kind of worry about. Public Works is gonna have work orders done at the end of September. Great. How do we process the billings to the municipalities for the work orders that are done for work for the municipalities? That requires a connection to the financial system.
Right.
And right now, that's manual. That's the way it's always been done. That's the way it will continue to be done. Well, when does that get connected?
Right.
And that's an example of something crossing those boundaries.
Could that be an example of something that happens after this is projected to be done? And then we've got all these manual things that have yet to be considered?
Good question. I mean, in other words, what's in the plan, what isn't in the plan? Because I've asked that question. I said, and I've gotten a very fuzzy response.
Yeah.
That says, is it going to happen as part of when I turn the rest of the accounting system on at the end of the first quarter? Is it going to include an interface to Public Works?
Yeah.
And will it, will the billings take place then
Yeah.
electronically rather than with spreadsheets?
Well, I would chair, at least from where I'm sitting, if it can be heard that it was important to us to have a project manager that oversees the entire system so that one person is accountable if there's a problem in any one of the four that you've outlined, that's a direction we want to see. We don't want the finger pointing of Public Works did its job, but Fiscal fell on his, or HR, whatever, it's not successful unless it's all successful. And that for that reason, I would think that one person in charge of making sure that those entities that are working hard to get their part done understand that none of it's successful if one fails. And that's the way it has to work because it's all integrated. Thank you.
Well stated. Okay, do we have any miscellaneous business? Hearing none, we thank you very much for your presentation, and there being no further business before this committee. We thank everybody for their attention and diligence, and we stand adjourned.